Australia's largest bank is facing 87 criminal charges over unscrupulous practices in its life insurance arm. CommInsure has been charged with hawking for offering to sell insurance products through unsolicited phone calls. Business reporter Daniel Ziffer joins me now from Melbourne. Dan, thanks for your time. What exactly are these charges against CommInsure?
These charges are quite surprising. During the Royal Commission, we heard of really egregious behaviour, which had been exposed earlier in a Four Corners that you might remember, showing false and misleading advertising, using outdated medical definitions of heart attacks and breast cancer to avoid paying people premiums. Exposed also at the Royal Commission, failing to act in the best interests of their customers. So, surprisingly today, these charges are about hawking. That is, unsolicited calls selling or offering to sell insurance products. Now, hawking, selling financial products over the phone to people who haven't requested them, is now essentially illegal after the Hayne Royal Commission. It was one of the recommendations. But many of the practices of selling insurance were already illegal. And that's because it can't take into account people's personal circumstances, it's intrusive, and as we saw in so many examples at the Royal Commission, it leads to really bad outcomes. You might recall there was a teenager who has Down syndrome who was sold life insurance, really dragooned into it through these excruciating conversations that were played to the Royal Commission, not from CommInsure, from a different insurance company. We also heard of Aboriginal funeral insurance plans being sold extensively in the Indigenous community to people who wouldn't benefit from them, and in really egregious ways, really pressure selling and forcing people into these products. So surprising charges, but very substantial charges, the first criminal charges against a major bank since the Royal Commission. And
Danny, what are the fines associated with these hawking charges?
They're minuscule. There are 87 charges, each one potentially up to $25,000. So Commonwealth Bank is looking at a maximum fine of $1.8 million for a company that most recently reported its profit as $8.5 billion. So it's not the money that's going to cause any kind of hit to Commonwealth Bank, but the shame of being dragged to court to defend criminal charges from one of its own entities that it has since sold.
Daniel, as you've mentioned, these are the first charges against one of the big four banks since the Banking Royal Commission. Do you expect more to come?
These are the first criminal charges. Already, the Prudential regulator has taken IOOF, the wealth manager, to court, seeking to boot some of its most senior executives from working in the superannuation industry. It lost. Also, ASIC, the other financial regulator, took a minnow firm called Dover Financial to court for essentially false and misleading advice as well. That is still, we're still waiting to hear the judgment on that one. These are the first criminal charges. We expect more. There were really substantial and appalling behaviours shown and exposed at the Royal Commission, and some of Australia's largest financial firms, notably I think AMP and NAB, will certainly be expecting a knock on the door or a pretty legal email in the next months and into the new year. We don't know what those charges are. When I speak to experts in the field, those are the names they keep coming back to, but we'll wait and see.
Daniel Ziffer reporting from Melbourne. Thank you.